Welcome to Canadian Mortgage Weekly. We are so happy to have you with us this morning. I'll just introduce Joe, who's going to be our co-host today. So Joe is a mortgage broker in the Barrie Simcoe area, but serving all of Ontario. Joe's married. He's got two kids, and yeah, really family oriented, but specifically for today's show, he is super knowledgeable for any of your mortgage needs, especially the topics that we're going over in this four-part series. So thank you for being with us this morning, Joe.
Thanks very much, Sam. Thanks for that great introduction. And yes, my family, yes, very family oriented. I'm a family man, I guess. I got two kids there. I love them so much, and got my wife Melissa there. So definitely awesome to be married, and just love being in this industry, and really looking forward to being part of this episode today, talking about refinancing for home improvements. Really looking forward to see what we can dive into and provide to our clients in terms of information. So Sam, right back at you. Sam Thompson is a mortgage agent with Mega Mortgage here in Barrie, Aurelia, and he's been with us for over a year now and rocking the refinances and the first-time home buyers and just helping all our clients out with their pre-approvals. Sam, it's good to have you on here. I understand you're married and
Mhm.
originally from Ottawa, but now in Barrie. So looking forward to have you on the show, and thanks for having me part of it.
Absolutely. Thank you for that introduction, Joe. And before we get too into today's topic and chatting about, mortgage news, we do want to draw some attention to our contest that is currently running. You definitely don't want to miss out. If you've watched any of the other few videos in our four-part refinance series, you'll know that we are actually doing an alternative draw. It's going to be over a 4-week period. So
Yes.
any comments or questions or shares that you have on the video will be an entry into the draw to win a $100 gift card for the retailer or the restaurant of your choosing. I think that's probably the hardest part once you actually win the 100 is what do you want to spend it on, right,
What do
Joe?
you want to spend it on? Yeah, I mean, like for me, it'd be probably Long and McQuaid
Right.
or Music Pro and Barry. You know what? Or maybe some skip the dishes so I can have a nice dinner at home with Melissa and the kids or something. But yeah, it's $100. That goes a long way.
Mhm.
Sam, what would you do with your $100?
Oh man, I'm not even sure. I guess it depends if my wife knows that I want it or not. We might have to
There you
split
go.
split the money. If it was just me, likely maybe Long and McQuaid as well. I need some new guitar cables and can always use more strings. So
Yeah, that's right. More strings. Like that's the thing that guitarists go through a lot, right? And
mhm,
I always find when I buy new strings, I always procrastinate putting them on because
that's right.
it's like it's nice to have that new pack waiting there for you when you're ready to go.
Yeah.
Anyway, so yeah, thanks for reminding everyone of the contest. And like Sam is saying, just share or comment or send us a question. Any of
Mhm.
those will qualify to be entered into our contest. And Sam, we'll be drawing that shortly, right?
That's right. Yeah, the draw is coming up. And it's any of the previous week's videos as well. So if this is your first video you're watching of our refinance series, feel free to go back and watch our other ones. And if you have any questions from the duration of those videos or extra information you'd like to know, please, it's a win-win for you to ask a question, and it's also an entry into the draw.
Awesome. That's great. Well, I guess we can get started with our program today. Now that
Mhm.
we've told everyone how they can win $100, let's chat about some mortgage news, right?
Mhm.
So, what's been going on in the mortgage market recently? What kind of news have you seen, Sam?
Yeah, so I think in some of the realtors that we've been chatting with and seeing the plethora of for sale signs that are popping up, I think we are noticing a slight softening of the market in terms of the house pricing and the speed of how things are being sold, all of that, right, Joe?
Yeah, I have been seeing that as well, and you're absolutely right. Maybe not so much that the market has become soft, but it was a
Mhm.
really hard driven sellers market all throughout February and March. And now we're seeing the market more balanced out, softened, so
Mhm.
it's balancing out. And that's actually making it a lot better for buyers to actually get their offers in and accepted, because when there's a lot more listings, that's what's happening. There's a lot more listings coming up, and just walking
Mhm.
around my neighborhood, just trying to get my steps in. I'm seeing all these houses now pop up for sale, whereas we only had maybe one or two listings in my neighborhood, and
Right.
now we have. I think I took an inventory of like 7 listings that I saw just walking around my immediate neighborhood in the last couple of days, and they are still selling and still selling for more than asking,
Mhm.
but the asking price to sale price is closing the gap.
Right.
And it's probably because less competition, because we have more listings, and that's not a bad thing. It's just a more balanced market, a market that we've seen for years, and it's still
Mhm.
a very healthy market, wouldn't you say, Sam?
Absolutely. And that's got to be a major relief for any, first-time home buyers that are watching that are looking to get out of a rental and into purchasing. That we're seeing some signs that there could be a softening or again, just more inventory. If there's, more opportunity in your price range. I think that's where we've seen sort of a marginalized group is if they qualify for a low amount, it really limits them without using a cosigner to what's actually available to them. So hopefully with this spring market, all of the for sale signs, it'll open it up a bit for first time home buyers.
That's right. Yeah. First time home buyers have been really kind of shut out of the market because uh, first time home buyers, unlike repeat home buyers, are more limited in the amount of equity they have. They have their own
Mhm.
savings that they're putting into the properties for the first time. They have not experienced any property growth. It's
Right.
all on them. And sometimes, yeah, a lot of the times we need a co-signer added to the file. So with all that, this is all good news for first time home buyers, as you're saying.
Hmm.
And with rates, they are still at really record lows. The low interest rates we saw in January and February, Sam, we are seeing that they've changed slightly
Hmm.
for fixed rates, but variable rates have actually stayed low. And as a matter of fact, I've seen some banks discount variable rates further. So now, like variable rates are a lot lower than fixed rates, whereas
Hmm.
back in January, variable and fixed were very close together. So
Right.
it was a easy choice at that point to take fixed. But now we're seeing a lot of people kind of really weigh out their options, wouldn't you say?
Yeah, absolutely. I mean, like you're saying, we're seeing the fixed year rate rise. But again, in comparison year over year, it's still quite low. But like you're saying, that marginalized gap between the difference of a fixed and variable, it's really making a lot of people question, what's the better option for them, where they see their financial goals and, how to maximize on what the low rate is.
You bet. And I always say if you're dealing with someone with regards to your mortgage, whether it is Sam, myself, or Terry Lynn at Mega Mortgage Barry, or your own mortgage professional at your bank, I always ask you to say, ask that person what they have for their own mortgage and why,
Right.
to get an idea of whether you should go for fixed or variable. Myself, I went with a fixed rate last year or 2 years ago now against my own advice. And
Mhm.
I've been variable for I think 17 years prior to that, and always won the market. And I saw rates in the high twos, and I was thinking, oh, it's a good time to lock in because how can they go any lower?
Right.
Well, now I'm really kicking myself because I have to pay these absorbent mortgage penalties to lower my rate back into a variable. And we're seeing variables in the 1.5% right now. They're
Right.
really good.
Hmm.
And the amount of savings you get in a variable can really offset your mortgage principal over the few years.
Hmm.
And if you don't take a variable and take a fixed, you're automatically paying a higher mortgage payment for the security of having that mortgage payment stay the same.
Right. Mhm.
Anyway, Sam, that's something that each client is going to have a good conversation with either you, myself, or Terry Lynn about to find out if it's better to do fixed or variable. And
Mm.
it's always very, very driven to what your goals are as a client. And I would say, as a first-time home buyer, even though variable is lower, it's almost better to go fixed in that
Right.
specific scenario because expenses can be
Mhm.
locked in that way for a long term, wouldn't you say?
Mhm. Yeah, it definitely helps with cash flow. I think is a big thing that first time home buyers, they're coming out of rent where, at least for the term of your lease, your payments aren't changing, they're the same. I think that's a really good entry into home ownership is having those same steady secure payments for the term of your mortgage. I think that helps them then take it from the next step of what they want to do financially. Like you're saying, once they have some equity built up in their home.
Excellent. Yeah,
Mhm.
that's good. A good conversation. So great to hear that the market's balancing out. And it's really good to hear that variable rates are really low right now, even though
Mhm.
fixed rates have been creeping up just slightly.
Mhm.
Really interesting to see how the market develops into the spring this year
Yeah.
with the balanced market. I really hope we see a lot more buyers become more confident and being able to have more selection out there now that
Mhm.
more homes are opening up and prices are softening just a tad. So yeah, let's move on. I know that today we're talking about refinancing for home improvements, something
Yes.
that a lot of our clients have been asking us about. And I know you and Terry Lynn and myself, we all help our clients with refinancing. And a lot of the times it is for home upgrades, improvements,
Mhm.
whether it is to add a hot tub or a pool or a bathroom or a kitchen renovation. So Sam, you
Mhm.
got a nice presentation prepared for us today. Why don't you uh, take the lead here and we can get into that.
Yeah, absolutely. So as Joe was saying, we are going to be going through the purpose of um, refinancing for a home improvement. Are you guys seeing the right screen?
Well, Sam, looks great. I see the control screen there.
Oh, okay, maybe I should specify. Sorry about that.
Oh, it's all good. But presentation looks good. So while you get that loaded, how about I just say to everybody, as you are looking at this presentation, if you are interested in speaking with Sam, Terry Lynn, or myself about your home improvements and what your goals are, definitely give us a shout and we'll be able to put together a custom scenario just like what Sam has done here for our
Hmm.
presentation.
Yeah, absolutely. So as we've been chatting about refinancing, we've looked at debt consolidation. We've looked at lowering a rate to save money because again, that's been the talk of 2020 into even 2021 that we're seeing these crazy low rates, and really a lot of people want to take advantage of those monthly savings. But what they're also looking forward to that we've been having, as Joe was saying, many conversations with clients is how to actually use that equity with the lower rate to get you sort of like a 2-for-1 bonus that you're almost paying less per month with a lower like locked in rate, as well as being able to use that equity for something such as a home improvement.
Yeah, that's really good. The 2-for-1 aspect has been really key this year. Lower rates,
Mhm.
lower payments, and getting more mortgage money for that same payment.
Right. Yeah. Um, and in case you've missed some of our previous videos, just to briefly cover refinancing, it allows you to unlock the existing equity that you've built up over your years of home ownership. Again, as I was saying, in most cases, because the rate is quite a bit lower, again, we're seeing it creep, but still year over year, it's quite low. It can result in higher savings just in monthly payments, and then it gives you those excess funds for whatever you need in your financial goal and sort of wherever you are financially, if it's investing into a new property, debt consolidation, or any home upgrades that you're interested in.
Awesome. That's great. Yeah, I love just hearing you say that. and it's already spurring ideas in my mind about home upgrades that I could get into, but I don't want to do that right now.
So why refinance for a home improvement? So when you're looking at the cost of, putting it all on, say, a credit card, or if you do have a line of credit that's available, it's typically a much softer rate to just lump it into your mortgage payments. And it also consolidates all of the repayments that you're making into one single mortgage payment, which again, as we were talking, a lot of people like that consistency. They like just making one payment each month, at that lower rate. So that can offset the cost of having, your mortgage payment plus a line of credit repayment plus car loan, the list goes on, and you end up spending quite a bit each month, all on separate things. So
Yeah. Yeah,
having it all in that one cost.
yeah, it's really key. I see a lot of people take out a separate renovation loan, and say if that renovation loan is $500 a month. Also keeping in mind that the bank or lender will usually charge higher for that renovation loan, maybe
Mm-hmm.
5 to 8%. It's way better to have that in your mortgage, and then you can just put your extra money down on your mortgage that you're saving.
Mm-hmm. Yeah, that's right. Yeah. So again, you can lock into a lower rate, so saving on your mortgage plus adding the additional funds that you require, and assuming that your debt, liabilities allow you to stretch this high, you can unlock up to 80% of the value of your current home.
Fantastic.
So what's required? So when you're chatting with Joe or myself, and you're saying, Joe, I want to maximize on these low rates. I want to refinance. What do I need? So you're going to need to know the current mortgage amount that you have. If you've been paying it off for 3 years into a 5-year term, we're going to need to know what that mortgage balance is currently. It's also good for you to know a current home value. There's ways that we can access that information for you as well, to give you an idea of an estimated value when we're giving you rough figures. But an appraisal is likely going to be required by the lender to move forward with the refinance. When you're chatting with your lender about what your current mortgage amount is, you'll also want to check if there are any penalty fees. So, of course, if you're midway through a 5-year term, there's going to be a penalty associated with breaking that mortgage to refinance for more. And you're also going to need a quote from a contractor for the cost of the renovation. So the bank's going to want some security of how much money do you actually need for this renovation, so that we can actually have an idea of how much money you guys need for the renovation you're looking for.
That's great. And you know what, Sam, even though there can be a penalty involved with breaking that mortgage, I think you're going to go into the example shortly, but quite often what I'm seeing, and what you're seeing too, is that even if the client pays the penalty and adds that balance to their mortgage and takes out the funds for the home improvements and refinances their mortgage to do so, they're still further ahead.
That's right. Yeah. Yes. I've been dealing with, or I've been working with a client that has relatively higher fees from some of the typical penalties that we see. And I think it is kind of shocking when you first see that amount of, wait, I have to refinance. I also have to pay this amount out. But many times we'll see that it actually, in the long term and in the repayments that you're making, they actually do come out ahead, as you were saying.
Fantastic.
So let's just go through a quick home improvement illustration, just to see, the process from the start of chatting with us to ending with, the additional funds for the improvement. So for this specific case, the couple purchased their home way back in 2017 for only $245,000 with the minimum 5% down. This is very typical for a lot of the first-time buyers. So their interest rate at that time was 3.74. So immediately, this could look familiar, but you're also saying that's a high number, compared to today's rate. There's so much savings that are available, and we'll get to how much they save. And they were making mortgage payments of $1,239 per month. So pretty standard. A lot of clients that we see they pay that much for their mortgage each month anyway. So it's a quite a typical illustration.
Excellent.
So going into today, so their home has been, again, ballpark appraised at about $450,000. They've paid their mortgage down, so it's now only 216,000 or 443. And now they're thinking, it's been 4 years in the same kitchen. They're getting tired of it. They're bumping into each other. All of the appliances are old. They want a new kitchen. I mean, if they're anything like even my parents, it took them about 8 years to actually settle on the kitchen that they want. So now they're thinking, you know what? We're seeing the rates are low. We have built up all this equity. Our home is now, doubled in value almost. Let's actually go for that $25,000 kitchen upgrade.
Yeah, that sounds exciting to me. And if it's anything like well, your parents, is pretty typical from everybody. So I think everyone waits a certain amount of time to actually pull the trigger. Whether it is they just don't know how to pull the trigger or just the deciding on what they're doing. At least this way, all of you out there are going to see exactly how it works out and exactly what a typical scenario looks like.
Yeah, yeah. So then when we're breaking down the refinance, we'll need to calculate a new mortgage that you're going to apply for, and it'll consolidate your remaining mortgage, any mortgage penalty. We're using an approximate figure of about 5,000. We can lump in the kitchen renovation fee and an approximate legal fees, if those are applicable, of about 2,000. So now we can see that, to pay off the mortgage, plus the penalty, plus renovation, and the legal fees, their new mortgage is only 248,000 and change, which, comparatively to what they initially bought the home for, it's not really even that much more when we consider the fact that you're getting that upgrade and the mortgage penalty and legal fees are included.
Yeah, that's a good point. And Sam, I know that when I've refinanced my mortgages in the past, just seeing that mortgage value go back up can sometimes be alarming to yourself, but keeping in mind that the equity has gone up too. And when I bought the home, I may have put 5% down and had no equity at that time. And even though I'm raising my mortgage back up now, it's nowhere near close to the percentage of the original equity before. Now it's almost like this particular scenario, it's about 60% of their equity is mortgage versus say 95%.
Right.
Anyway, anyway.
Yeah, absolutely. That's a really good point.
So it can help alleviate some of that feeling of alarm that your mortgage is creeping back up because you still have all this equity if you were to sell today.
Yeah, absolutely. And now when we look at their scenario on the other end, we've gotten all the documents in, the quotes. It's been submitted with the lender. They're now secured with a new mortgage of the same value, 248,443. They've locked into a 5-year fix at 2.29, which, I mean, a comparison alone of 3.74 to 2.29 on a 5-year fix is incredible saving amounts. Their new monthly payments, based on a 5-year fixed on a 25-year amortization, are now just over $1,000. So they're actually saving money month over month for this renovation, for refinancing, just because the rate is a lot lower. And I think that's been a big drive to why people are pulling the trigger now. As we're saying, they're comfortable to wait, 4 years, 5 years to actually make these upgrades. But we're seeing that rate change and the amount they can actually save with including these renovations. People are becoming more aggressive in going into a refinance and maximizing on that.
Yeah, well, especially since you're illustrating the fact that, in this case, this example shows that the new mortgage payments are actually lower than the old mortgage payments at the lower mortgage amount.
That's right.
So in turn, because the rate is lower and the payment is lower, they will have more cash flow each month after the kitchen renovation and paying out the penalty. And these clients will also have more going towards principal than before because of the lower rate.
Hmm. Yeah.
That's great example there, Sam.
Yeah, and the benefit as well um, of refinancing is it is case to case to what your financial scenario looks like, but we can also customize your amortization schedule. I know that that also can be a red flag to some people, is like you were saying, Joe. They see the mortgage is increasing, but also they're thinking, some people have to tack on an additional 5 years and refinance at a 30-year amortization. But this value is actually custom. We can shorten that depending on what the ratios allow for your case-to-case scenario. And we can even have it set up to match payments to the exact same as what you were making before, if that does make you more comfortable in keeping your amortization schedule low.
That's awesome. Yeah, great example.
Mm-hmm. So that's the end of my presentation. It was short and sweet, to the point, but running through some of the figures on, having that refinance for a home improvement is, it's a very viable option for a lot of people, especially today.
Yeah, it really is. And as we just expand on that a little bit here, I just want to encourage everyone to throw out their questions, whether it is in the chat there or privately after the episode is aired. All those questions will be entered into that contest that Sam has been reminding everyone about, which is awesome, the $100 giveaway.
Hmm.
And Sam, like key points I'm taking away is, if I have a mortgage today and if I have a penalty today, it still makes sense to refinance because number one, I can get a better rate secured for the next 5 years going forward in case rates go back up in exchange for that penalty. I can take out that extra money I need for that kitchen renovation that I've been waiting 8 years on or however long on, and actually
Yeah.
not have to go through the process of moving to a new home to get that new kitchen, but stay in our current home
Mhm.
and enjoy it a little bit longer and use that equity for that kitchen renovation. And as a result, lower that mortgage payments, giving more cash flow to you and letting you decide whether you want to put that money back on the mortgage to pay it off quicker with the
Mhm.
lower rates, having more payments going to principal than before, which is huge as well,
Mhm.
because you can pay off the mortgage now quicker. And also you get to deal with us. Obviously, that is a really good thing as well.
Of
Either
course.
Sam, Terry Lynn, or myself. Please throw us your questions. Sam, do we have any live questions this morning?
I can check. I don't believe we do at the moment, but there is still time. Again, as Joe was saying, I'm going to say it again about the contest. If you're watching this video after it's aired, maybe you had to rewatch the presentation to get those numbers. But if you do have any questions, even after the air date, after we finish up today, you can still comment on the video. We'll wrap up around with any questions, and again, get in touch with you if you had any questions regarding today's presentation.
Awesome. Thanks, Sam. So as we close out our episode today, thank you for joining us today on refinancing your mortgage for home improvements, renovations, whatever it is. It's been a really exciting series to be able to cover this, as well as refinancing to pay out debt and refinancing for lowering your payment and getting a better rate.
Mhm.
Uh, the key thing I'm noticing is that you can, as we go through this series, certain people would like to maybe combine the three as well, and it's
Mhm.
almost like that is possible. Someone could take out extra money for home renovations and debts and to lower their rate. All good things.
Mhm.
Next week, we'll be chatting about refinancing in order to purchase an investment or cottage or investment property, rental property. That's going to be really exciting. And Sam, I'm looking forward to chatting with you about that
Mhm.
at that episode. We have something special planned for next week on Wednesday, and then we'll keep you all posted. So tune in next Wednesday for that announcement
Mhm.
at 10:30 on Wednesday, and we'll have a special guest joining us. Our special guest has gone through the process of refinancing to purchase investment properties and our guests will share their experience in dealing with us and building their portfolio of investment properties without using any of their own savings, which is really key. And a lot of people always ask me about that. How can you buy rental properties and investment properties or a cottage without using my savings or RSP or TFSA money? Well, we're going to talk about that, Sam, and I'm looking forward to that.
It's going to be a good episode, especially with our guests. So you don't want to miss out, especially if you've been thinking about getting into the investing in real estate. It's going to be a really good episode. I'm really excited for it.
Awesome. And then that will be the end of the series, and we'll be doing our final draw for the $100 gift the week after in response to our series. So please do comment, share, or ask us a question either privately or via chat or the comments below, and we'll make sure we enter you into our contest. And Sam, anything else there to add?
I think that's it. Just remember to share or comment on this video, and I think we should see you guys all next week.
All right, we'll see you next week.
Okay, bye.